Ladies and gentlemen, good day and welcome to Powergrid Infrastructure Investment Trust Q2FY25 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mohit Kumar from ICICI Securities. Thank you and over to you, sir.
Thank you, Tanmaya. Good morning. On behalf of ICICI Securities, I wish warm welcome to the new management team to Q2FY25 earnings call of PG InvIT. We are privileged to join today with the management team. We have with us Shri Naveen Srivastava, Chairman, Shri Sanjay Sharma, Director, Shri Amit Garg, Director, Srimati Neela Das, Chief Executive Officer, Mr. Gaurav Malik, Chief Financial Officer, and Mr. Shwetank Kumar, Company Secretary and Compliance Officer. We will start with brief opening remarks by the management, which will be followed by Q&A. Over to you, sir.
A very good morning, everyone. On behalf of Powergrid Unchahat Transmission Limited, the investment manager of PG InvIT, I would like to extend my appreciation to all participants for joining this call despite their busy schedules. Today, I am joined by Mr. Sanjay Sharma, Director of PUTL, Shri Amit Garg, Director of PUTL, Srimati Neela Das, CEO of PUTL, Shri Gaurav Malik, CFO of PUTL, Shri Shwetank Kumar, Company Secretary, and other senior officials. On November 7, 2024, PG InvIT released its financial results for the quarter and half-year ending September 30, 2024, along with distribution details for the quarter. These results are now accessible on the BSE, NSE, and our websites. A presentation detailing PG InvIT's Q2 and H1 FY 2025 results has been uploaded to our websites. In the interest of time, I'll provide a concise summary of these results. Our investor base has shown steady growth, expanding from approximately 15,000 unit holders at the time of IPO to over 170,000 unit holders as on September 30, 2024. We extend our heartfelt appreciation to our diverse investors for their trust and confidence in PG InvIT. For our new investors, let me introduce the trust. PG InvIT is an infrastructure investment trust with Powergrid Corporation of India Limited, a Maharatna CPSE, and India's largest power transmission utility as its sponsor and project manager. Powergrid Unchahat Transmission Limited, a wholly owned subsidiary of Powergrid, serves as investment manager, while IDBI Trusteeship Services Limited act as a trustee. PG InvIT owns 5 SPVs, namely VTL, PKATL, PPTL, PWTL, and PJTL. Currently, PG InvIT holds 100% equity in VTL and 74% equity each in of the other 4 SPVs. These power transmission SPVs, which includes 11 transmission lines spanning around 3,699 circle kilometers and 3 substations with a transformation capacity of 6,630 MVA, are operational and revenue generating assets. The transmission service agreements for these projects have an average remaining life of more than 28 years. These 5 operational revenue generating interstate transmission system ISTS assets with a strong track record in availability, reliability and safety were implemented under the tariff-based competitive bidding TBCB mechanism on a build, own, operate, maintain basis. They come with a 35-year contract agreement, minimizing regulatory risk on transmission charges and providing long-term assurance to the unit holders. PG InvIT is backed by India's largest transmission utility as both a sponsor and project manager, which strengthens its position in the sector. Additionally, with availability-based fixed tariff under long-term transmission service agreement TSAs, PG InvIT offers high visibility on cash flow while maintaining low leverage, a key advantage that supports its debt-funded acquisition strategy for future growth opportunities. With these strengths, PG InvIT is dedicated to creating values for its unit holders. PG InvIT aims to deliver consistent, stable, and predictable returns to its unit holders. Let us now turn to the Q2FY25 distribution. A distribution of rupees 3 per unit was announced on November 7, 2024 for the quarter ending September 30, 2024. This marks the Trust's second distribution for fiscal 2025 and 13th consecutive distribution since listing. Unit holders will receive this distribution on or before November 20, 2024. Including this Q2FY25 distribution, PG InvIT has declared a total distribution of rupees 40.50 per unit since listing for an IPO price of rupees 100 per unit, totaling amount to over rupees 36.85 billion. As informed in our previous earning calls, we aim to achieve a distribution of rupees 12 per unit for the fiscal year 2025. Our quarterly distribution follows our distribution policy and SEBI InvIT regulations, ensuring that at least 90% of the net distribution cash flow NDCF is distributed to unit holders. As per the policy, distribution are declared and paid at least once every quarter. Now the highlights for the quarter ended September 30, 2024. Utilizing the latest technology and prioritizing safety, our project manager has ensured that the transmission assets are operated safely, without accident, and with high efficiency throughout the quarter. The average availability of each SPV exceeded target levels, underscoring their higher performance and reliability. As per the provisionally available data, the Q2FY25, the average availability has surpassed 99.75 across all SPVs, maximizing the potential incentives. Currently, this data is provisional except the VTL, as we await the monthly availability certificates from respective regional power committees, RPCs, and the Ministry of Power, Government of India, covering July to September 24. As you know, one of our SPVs, PPTL, is currently executing a project under regulated tariff mechanism. This project, titled Implementation of 400 kV line Bay at 760 by 400 kV Parli new substation for RE interconnection. This was allotted to PPTL by CTUIL. An order has been issued by CRC for grant of transmission license. This project is expected to be commissioned in December 25 with an approximate cost of rupees 250 million. This is in addition to an earlier project under RTM in PKATL, which has been commissioned in February 24. The project cost is approximately rupees 30 crores, which is also adding to our top line. Financial highlights for Q2 FY24-25. Total consolidated income amounted to approximately rupees 3,290.35 million, which includes rupees 3,199.64 million from the revenue from operations and rupees 90.71 million from other incomes, primarily from interest earned on the deposits. Total expenses, including impairment for the Q2FY24-25 on a consolidated basis, were around rupees 1,123.22 million. In the first half of financial year 24-25, total consolidated income was about rupees 6,557.15 million, comprising of rupees 6,355.48 million from revenue from operations and rupees 201.67 million from other income. Consolidated total expenses excluding impairment for H1 FY 2024-25 were approximately rupees 2,250.25 million. The net distributable cash flow NDCF calculated at the SPV level has been included in the consolidated financial results. The trust receives cash flow from the SPVs in the form of interest income, dividend income, and the SPV debt repayments. PG InvIT's NDCF for the quarter ending September 30, 2024 amounts to rupees 2,699.79 million and rupees 5,228.20 million for the half year ending September 30, 2024. The announcement of rupees 3 per unit distribution for this quarter includes the interest component of rupees 1.91, taxable dividend component of rupees 0.60, exempt dividend component of rupees 0.26, repayment of SPV debt of rupees 0.22 and treasury income of rupees 0.01. The total distribution amount exceeds the stipulated requirement of distributing at least 90% of the NDCF at the PG InvIT level as per InvIT regulations and our distribution policy. As of September 30, 2024, PG InvIT's outstanding external borrowing was rupees 5,683.88 million. This is from the rupees 5,755.85 million loan raised from HDFC Bank in March 22 to partially fund acquisitions. The loan is floating rate, loan linked to the 3-month T-bill with an average debt cost of 8.12% for H1 FY24. Net debt as a percentage of asset under management AUM was approximately 0.13% as of September 30, 2024, allowing ample room to fund future acquisitions entirely through debt. The trust maintains the highest credit rating AAA with stable outlook from ICRA Limited, CRISIL rating and CARE rating. Bill trade receivables as on September 30, 2024 stood at rupees 1,321.17 million, equivalent to 38 days of billing. Acquisition of balance 26% equity shareholding. We are expecting to complete acquisition of remaining 26% stake in our 4 SPVs, namely PKATL, PPTL, PWTL and PJTL during the financial year subject to unit holders approval of transaction. The sponsors board has approved the proposal to sell the balance 26% share. Investment manager board has also approved the proposal to acquire this 26% stake subject to approval of unit holders. We envisage concluding the acquisition process towards the end of this financial year, provided the unit holders approve the transaction. Now the outlook. Our growth strategy focuses on acquiring operational power transmission assets aligned with the InvIT regulations, statutory requirements and unit holders' best interests. While we remain committed to the unit holders, it is important to note that the limited availability of assets for acquisition presents an inherent risk for the PG InvIT, which we have consistently communicated. Currently, operational power transmission assets available for monetization are limited. However, between 2022 and 2027, the country plans to add approximately 1,14,687 circuit kilometers of the transmission line, 7,76,330 MVA of transformation capacity at 220 kV level or above. From 27 to 2032, an addition of 76,787 circuit kilometers of transmission lines and 4,97,855 MVA of transformation capacities are expected to be added. With these substantial investment in the sector, we expect that these projects reach commissioning. They will present acquisition opportunity for investment vehicles like PG InvIT seeking revenue generating assets. We are closely monitoring the progress of these ongoing projects to stay attuned to near-term opportunities. Additionally, should any states choose to monetize their operational transmission assets to generate capital, this would open up a new opportunity for us. This process, however, may be gradual and would require sustained policy advocacy and with the states. With significant debt headroom for acquisition, our competitive strength and our position as an established investment vehicle with a large pool of institutions and non-institutional investors, we believe PG InvIT is well positioned to benefit from various upcoming transactions in the sector. We emphasize that all assets considered for acquisition will undergo a rigorous evaluation process. This process includes assessing each asset's operational history, compliance with InvIT regulations and statutory requirements, adherence to the trust corporate governance framework, and alignment with the unit holder interest to ensure suitability for inclusion in PG InvIT. As mentioned previously, we would like to maintain our distribution guidance of rupees 12 per unit for FY24-25. Thank you, and now I would like to hand over the moderator for further proceedings. Thank you.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aniruddha Arundekar, who is an individual investor. Please go ahead.
Thanks, sir, for the opportunity. I have a couple of questions. First one is, what are the basic InvIT regulations or rules that PG InvIT has to follow before acquiring a new transmission project or power generation project, if we can? Because IndiGrid recently launched a platform under which they are also going to acquire transmission projects, and they are also investing in greenfield transmission projects. So can we do similar investments? If yes, why are we not doing it currently? And the second question is, we have given guideline of 12 rupees per unit for this financial year. So how much of this DPU is actually being funded by cash reserves of the InvIT? Thank you.
So, Anirudh, coming to your second question first, the guidance of rupees 12. Well, as per the InvIT regulation, minimum 90% of the NDCF is to be upstreamed, taking into consideration cash at both the levels, the InvIT as well as the SPVs at the overall level. These are the changes. This is the new guidelines effective from 1st of April 24. So, if you see, we begin our InvIT journey way back in May 21, and we started with the cash balance of 216 odd crores. Now, presently, we have the cash balance of 578 odd crores, and if you remove the DSRA and the distribution for this quarter of 273, roughly we will be landing at a figure of 305 crores. So net on net, there has been increase in the cash position. This is primarily due to the reduction in the debtor days that has occurred since IPO till 30th of September. So there is no major dip from the opening cash reserves that has been eaten away to give the distribution. So that reserves is intact as of now. So that is the answer to the second question. With respect to the InvIT regulation, there is no bar. As per the regulation, we can invest in any of the infrastructure projects. The infrastructure projects are governed through the harmonized list of the Ministry of Finance, Government of India. So as per which we can invest in any project which has been qualified under that harmonized list. So you are very correct that our counterpart IndiGrid has been investing in transmission as well as in RE generation asset. So maybe the chairman sir can further.
Now I'll come to the reply to the first question, Anurag. And we are thinking in going in a monetization of transmission assets of the states with the policy, the state level that has come out in the various. They are coming with a definite timeline to investment. And as far as greenfield project is concerned, this is, I feel, is coming out with the construction risk, and which we feel that which includes the risk to the investor also. However, in case of RTMs and all, we have already, in the speech, we have already told you that one already we have commissioned, and secondly we have got it, and in future also, whenever any assets which is required by CTOIL in these areas in our SPVs, they will come as a RTM. Thank you.
Mr. Anirudh?
Hello. Sir, one more question, because the state asset acquisition may or may not happen. So the competitors or the IndiGrid, like the InvIT, they are seeing the opportunity to acquire new assets. But at the same time, we are not doing any new acquisition. So why? I want to understand why it is so. Because if the competitors can acquire new assets, or they are seeing the opportunity, but we are not doing the same. So if this continues, the W level will not be maintained. So can you clarify anything more on this?
Of course, I understand there is a limited opportunity at present which is there, but I can say one thing, that it's a policy guidelines which involving various factors, and we apprehend that this procedure is a time taking. We are in touch with few states in this regard, that assets assets coming up in the acquisition are evaluated, and we see that in the next futures that some assets which we are thinking, and it will be acquired. We are in the process of acquiring the assets.
Sir, one more question, if you may allow. That is regarding the 26% remaining stake that we are going to acquire by the end of this financial year. You said that in earlier conference call that the PG InvIT entered a purchase agreement with Powergrid, so we have to acquire remaining 26%. But today, or also in the previous publications, you mentioned that this needs unit holders' approval. So whether it is mandatory or not, we have to repurchase remaining 26%, or is it not that mandatory or optional for the InvIT?
No, it's mandatory. Unit holder approval is mandatory, and for that we are, after this one, it will be open for us.
Okay, thank you, sir. That's all from my side.
Thank you.
Thank you very much. The next question is from the line of Abhinav from ICICI Securities. Please go ahead.
Yes, sir. Thank you for the opportunity. So my question is, what will be the distribution guidance for FY26, and also if we can expect any new acquisitions in FY26? This is over and above the 26% stake that we'll be acquiring from the sponsors.
For FY25, I can say that we are emphasizing a DPU guidance of rupees 25 and rupees 12, and going forward distribution with the line with the InvIT regulation and distribution policy. But guidance for FY25-26 will be provided at the later stage, mostly in the earnings call for the annual result when 25-25 will come. Thank you.
Okay, sir. And on the acquisition part, if by FY26, if we can expect some new assets to be added in our portfolio?
As I already told in my this thing, in my speech also, yes, we are in the forward direction in that way. And we see a good thing in the near future. That's it.
Okay, sir. And so are we looking to acquire any assets from private players or like how is it?
We are open. We are open because now the new policy which Central Electricity Authority has come out with this thing. So any thing which come out to be, we are open and we'll surely quote in that.
Okay, sir. Thank you.
But I can say very well, there is a little limited assets are there, but we are open. We are going in that direction.
Okay. Okay. And sir, I mean, you said that limited assets in terms of, quantifying it, how many, if you can just throw a number or anything?
That we cannot at present tell you, but we are rigorously will put it in that way. We are moving in that direction, forward in this direction. We are open and will do it.
Okay, understand.
I would just like to add on this, Abhinav, if I'm right. See, when we say limited, you can yourself, if you are tracking the power transmission sector in the country, you can yourself see these assets are housed in 3-4 major players. Apart from that, there are very sporadic cases where 1 or 2 assets are available with some developers. So that's why we mentioned very limited. The details, we have not gone into the numbers, but you can see this is public information available on CA website and everywhere. So I think you can do some study on that. But when we say limited, because not everybody is willing to monetize, not all are willing to monetize through the InvIT route. So there are conditions to that. That's why we say limited.
Yeah, exactly. Got it. Understood. Yeah, thanks.
Thank you very much. The next question is from the line of Sarvesh Gupta from Maximal Capital Private Limited. Please go ahead.
Yeah, good morning, sir. So first on this acquisition, so what is the approximate cash outgo or debt that we'll have to take for this acquisition?
Okay. We are, board of sponsor and IM has already given the approval, and we are in the process of unit holder approval. We cannot disclose details right now, but we'll see that it will have a positive part in that.
Sir, I need a ballpark number. As you are saying, it will go for unit holder approval anyways, so I will need a ballpark number.
We'll communicate as soon this is.
Sir, but why it cannot be communicated now, sir? When you have already approved, why it cannot be communicated on a public call with the investors? You can give a ballpark number, na, sir, whether it is 1,000 crore or 5,000 crore, 10,000, whatever it is, just give a ballpark range.
Mr. Gupta, this information will be available with all the unit holders probably today itself. Before the end of the day, we will be floating for the approval of the unit holders. So that figure will be available in the public domain today itself, rest assured. Coming to the second part of the question, what will be the funding look like? It will be majorly debt funded. Only a limited part will be through the internal accruals. So
and sir, what will be the IRRs given your cost of funding as on today that you will be acquiring these assets on?
IRR, this is what IRR we are looking at is a part of the strategic decision making. It is not something, which can be disclosed in the public. My cost of funding is something which will be available in the public domain. You can have a look at it. Presently, my cost of debt is around, it is sub 8, 7.75-ish sort of a thing. So obviously there will be some margin over my cost of debt, and it will be priced accordingly, sir.
Gupta ji, I also want to add into that. Objective acquiring an assets give some bump only, and for the returns to the unit holders and elongate the life of the consistent return over the some years. So this is, you should see that we will be in something give the bump up to the returns. That is clear cut.
So 10 to 11% might be the range, sir, for which on your cost of debt of 8%.
As our director has already told, it will be known to you today itself. It will be
the pricing will be known to you today itself. IRR part, we would not like to, discuss in any public forum. Yeah.
Okay. And so the expected cash flow is anyways known for these assets. So pricing is the only thing that you are going to disclose right now.
So actually, what is Powergrid getting out of this holding 26%? They are getting the dividend against their holding in the SPV. So, basis certain assumptions which are much in line with our valuation report, we worked out what can be the future expected dividend payouts for Powergrid portion, and accordingly it has been discounted, and a price, which was agreeable between both the parties, has been offered and accepted. And it is ultimately flowing to you, the unit holders, for the final approval. So if it comes, the deal will go through. If it doesn't, obviously it will fall.
Yeah. Okay, understood. And secondly, in terms of your current NAV, what is the number right now?
Must be around 83 point something. 83.07.
Okay. And this acquisition of these assets, so they will be done by end of this financial year, and assuming that unit holder approval will come.
Yes, surely.
So next full year, you will at least have 100% in all these 5 assets, assuming unit holder approvals. Yes. So given that, is there a ballpark guidance that can be given for FY26? Because, let's say these acquisitions go through, which is very much possible. What can be the FY26 sort of a DPU?
No, I think Amit just mentioned in his previous response also. I think for the next financial year's guidelines, I think we'll have to wait till the annual results of the InvIT. And we'll, as you can see in the last 2 years also, we have been consistent in informing you about our guidance along with the annual results. So please request you to be patient till that time. Yeah.
Okay. Now on these state transmission assets that you may want to acquire, so anything which is already there in the pipeline, number one, and secondly, what is the kind of counterparty risk that you assess on these assets as compared to the usual non-state ones? These are intra-states, I am assuming.
Yes, Sarveshji. You're right that these are intrastate assets, number one. Number two, regarding the counterparty risk, that is one of the major things in the intrastate assets, and as and when the opportunity arises, we'll definitely ensure that there are sufficient safeguards built in the manner in which we end up acquiring these assets towards the counterparty risk as far as the payments are concerned. As regards the states or at what stage we are, so see, as we have mentioned earlier also, in the reports also we have always mentioned that this particular thing is something new for the states. The government of India has issued some guidelines. The states are trying to work on it. Being the first InvIT and from the CPSU background, we are trying to policy adequate with them. We are trying to share our experience with them. So as and when they are ready and they are willing to monetize, we'll be there to participate in any which way they want to come up with. But as of now, which states we are talking about, it will be more generic. We have been called by various states. We would not like to name few, but we have been called by various states to share our experiences, and we have done that.
Understood. And my final question is, so Powergrid's policy of not giving any further assets to us as of now, that stays as it is, as there is a status quo on that.
It is as it is. At present, it is as it is.
Okay, sir. Thank you and all the best.
Thank you.
Thank you very much. The next question is from the line of Krishnan PS from HNI Investor. Please go ahead.
Thank you. Good day to the PG InvIT management team. I have 2 queries. I'd like to know why have our fair value assets decreased from 10,268 crores in Q1 to around 10,032 crores in Q2 FY25, and also the NAV per unit has dropped from 85.28 in FY24 to 83.07 in Q2 FY25, and is also the impairment of 166.89 crore linked to the drop in the fair value assets, and if you can also explain the impairment in detail. This is my first query. And the second query is, how much of total cash reserves have we utilized since the IPO? I mean, I know this question has been answered in part by you based on the query from the previous participant. Thank you.
Yeah, so Mr. Krishnan, actually, this impairment is nothing but is accounted for in accordance with the Indian accounting standards, and it is basically derived from the valuation that the valuer does in accordance with the InvIT regulation. So basically, I mean, you view it like an annuity structure. When transmission, this intrastate transmission, for the TBCB SPVs, the top line or the revenue is fixed, almost fixed, till the end of the the life of the project. So we estimate, or the valuer estimates, the expense portion of it, and works out the cash position of each SPV. Now, it applies a WACC, the weighted average cost of capital, basis certain assumptions with regard to the cost of debt, with regard to the cost of equity, the market scenario, beta, and the things like that, and ultimately discounts the cash flows to arrive at a value. If you have noticed in the valuation report, the weighted average cost of capital increased to 8.95% from 8.79% from March 24 to September 24. So as the WACC goes up, the value on the NPV method is bound to come down. That is one part of the story in the decrease in the enterprise value. And the second part is that since the cash flows are for a specific period of time, so as and when you eat into the given time frame, the value left over is lesser. So since 6 months have already elapsed from March to September, for which the cash flows are already out of the system, so the value any which ways, even if the WACC remains constant, is bound to come down. So these two factors ultimately resulted in decrease in WACC, and ultimately basis whatever the value was earlier, whatever the value is now, the difference was routed through in accordance with the Indian accounting standards as an impairment. And the same thing resulted in decrease in WACC. So this is one part of the story. Regarding the cash utilization, I mentioned earlier, so we started with a cash of around 26 crores May 21, and we stand at 578 crores now, which includes the 273 crores of distribution, cash position pe aa jao yaar, which includes 273 crores capped for the distribution, and some amount of roughly around 12.5 crores for DSRA and other things. So net on net, I am having a cash balance of 305 crores against 216 crores. But this is one part of the things. The other thing is that the debtor days have also decreased since May 21 to September 24. So net on net, nothing much we have eaten away from the opening reserves.
Okay, thank you. I mean, just a query on the impairment part. So are you saying that with the interest rate going down, there's a possibility that the NAV can also go up going forward?
Yes, most certainly, sir. I mean, there is an inverse relation between WACC and the value. But be mindful of the fact that this is only a book entry. I mean, there is no cash involved as far as the impairment goes. This entry is passed only in accordance with the Indian accounting standards. It does not impact the cash flow of either the SPVs or of the trust. So it is only a book entry. Even if there is a reversal of impairment, it will be reflected in the books of accounts, NAV will go up. But the distribution, there will be no impact.
Okay, but do you also expect this to go down quarter on quarter, the impairment, based on?
The interest cycle have reversed of late, and expecting it, I mean, I don't know, there's too much going on in the markets currently, but if there's a rate cut from RBI, say, during December or January, anytime during the fiscal, it may reflect in the, the lower interest cost and the lower WACC.
Okay. All right. Thank you. That's it from mine.
Thank you, Krishnan.
Thank you very much. The next question is from the line of Parag C., who is an individual investor. Please go ahead.
Yeah, good morning, everybody. My questions pertain to the market price of the units, which are around 86, 87 rupees at present. The NAV has fallen to 83 rupees. And if I look at your projected cash flows, the cash flows, distributable cash flows are projected to fall by almost 30-35% compared to the current value. Clearly, the performance compared to any other InvIT has been poor. You will understand that investors like us are highly disappointed due to this poor performance. Earlier in this conversation, you were talking about a focus on acquisition. Could I understand from 2021, when this InvIT was launched with much fanfare, how many number of sponsor and third-party assets have you actually evaluated with some approximate value?
As far as the what we have evaluated is something that cannot be disclosed, but yes, the transactions that have happened in the market, we have definitely tried to look at them. But if you look at, not many transactions otherwise also have happened in the sector, except for the transactions which were a part of the ROFO of the other assets, other InvITs.
Sir, even if you cannot disclose the number of assets, I don't know why, because every other InvIT is disclosing these things. Could we at least know as investors how the number of such assets that you evaluate, 5, 6, 7, 10, how many in the last 3 years?
We have evaluated 3 such assets in the past.
In 3 years, you have evaluated 3 proposals, sir. Is that not a reflection on the kind of importance the parent and the management attaches on improving investor value? Second question, I have is, have you ever considered a buyback? If not by the InvIT, because I understand it doesn't not allowed currently under SEBI guidelines. Have you presented to SEBI? That's the question. Second is, your sponsor, which is a government-owned organization, if it is not able to part with any assets to its own InvIT, the least it could consider is buying them back from the market from the retail investors like us. If you look at it, the retail investors today are 34% of the unit holders, and they have consistently been loyal to you, whereas the institutional investors have taken their money and gone. We are left holding, an asset which is decreasing in value. Is there any possibility of a buyback that has been considered or can be considered to help us recover our value and also perhaps improve the pricing of the unit?
On the buyback part, as far as the InvIT is concerned, you have rightly mentioned that it's currently not allowed as per the regulations. And as far as the sponsor's call to undertake a buyback is concerned, I think we would not be in a position to speak on behalf of the sponsor. It's the sponsor's call. And as and when the opportunity arises, you may kindly discuss the same with the sponsor.
We do, but as the management, we expect the unit holders' interest to be taken care of, right? And we expect you to take those steps. Third is any plans to have representatives of the unit holders as a director on your board?
Shashank, would you like to answer?
No, I think there is already InvIT regulations on this behalf.
Yes.
Yeah, I mean, there are already regulations with respect to the unit holder nominee director on the board of the investment manager, which says that, either individually or in consortium, any unit holders holding more than 10% can nominate a director on the board of the investment manager. Now, kindly appreciate the fact that we have been writing to the unit holders to give the nominations as mandated in the InvIT regulations, and being a CPSC, the nominations and the appointment ultimately requires the approval of the central government. So in line with those guidelines, we have been writing to the unit holders and acting accordingly, sir.
Right. My only request as an individual investor is, please try to take steps to protect our interests. We have suffered the last 3 years, and we don't see any hope as of now, based on even what you mentioned in the current call. Please look at our interests.
Sure.
Thank you so much.
Sure. Thank you.
Thank you very much. The next question is from the line of Nidhi Shah from ICICI Securities. Please go ahead.
Hi, thank you so much for taking my question. My question was basically on the assets that we are planning to acquire. I understand that you are waiting for that you will put in for unit holder approval soon. So, as per expectations, what is the timeline by which, once the approval comes in, we can expect to have these assets completely acquired? That is the first question.
Once the unit holders, this annuity comes out, we'll surely within 1 month or within 1.5 months, we'll be able to do it.
Yeah, this financial year.
Okay.
In this financial year, we'll do it. In this financial year, we'll surely do it.
All right. And with the acquisition of these assets, is it that we will be able to maintain the current DPU guidance that we have of rupees 12 per unit over the next couple of years, or is this going to give us incremental DPU where we can probably move to a 13, 14, 15 number?
As far as the incremental part is concerned, there will be a nominal increase in NDCF. As you can see from our previous distribution, we declare rupees 3 per unit distribution. And after that, rupees 3 and average taxable dividend come out to be around 30 paisa. So it is around 10%. So now you realize the fact that this dividend, which is 30 paisa, dividend which is currently flowing to Powergrid InvIT, which is 74%, holding the 4 SPVs. What will happen? That balance 26% will also start acquiring this to PG InvIT in the form of dividend. And if we take this balance 26% straight, however, having said, we have to take either the additional loan to fund this acquisition, and that loan will have to be serviced. There will be interest cost attached to it, and there will be a capital repayment also. So loan repayment is to be done to the financials. So all in all, financially, there will be not any very significant gain. It's only from the control perspective that you will be 100% owner for the now, which we already told, for all the SPVs.
All right. Thank you so much.
Thank you.
Thank you very much. The next question is from the line of Vipul Kumar Shah from Sumangal Investment. Please go ahead.
Hi, sir. Thanks for the opportunity. So my question is, IndiGrid takes up battery storage projects, they take up greenfield renewable projects. So why we are not taking it? Are we lacking any management bandwidth? So what is the reason which is preventing us from taking such type of projects? And we strongly feel that sponsor Powergrid has totally abandoned us. Means the units were issued at 100 rupees and now they are hovering around 85 rupees. And you are asking us to put this to Powergrid. I don't think this is a sign of good corporate governance on the part of Powergrid, which is India's premier utility. They have a responsibility towards unit holders. So I would like to clarify these points. Thank you, sir.
So, thank you for the question, Vipulji. As far as the other assets, other sectors are concerned, we believe that InvIT as a structure, as an instrument is not supposed to bring in more risk. Even if you look at the regulations, they also permit only a very small portion of the overall asset value to be put into construction assets or the greenfield projects. So we as the entire InvIT right from day one, we have believed that we should look at operating assets. That is the first part. And we are continuously looking at operating assets wherever the opportunity comes up. We are not close to any of these things, but such opportunities are coming up. On your other question regarding the involvement and saying that Powergrid governance issue, I think Powergrid is a separate listed entity, so it would not be proper for us to comment anything on from their behalf. However, rest assured, your views would be conveyed to the sponsor. Yeah.
Hello?
Yes, sir.
Hello? Yeah, so Of course, Powergrid is a separate entity, but it is your duty to convey the views of the minority shareholders and the value erosion which they have done to the minority shareholders. Then who is responsible if for?
No, sir. As I just mentioned, your views would adequately be conveyed to the sponsor. But I must just also add a little bit that, see, we, Powergrid or PG InvIT, as the management sitting here, we do not have a control on the way the price of the unit moves. It's driven by market movements and how they perceive different things. So, if you look at the performance of the InvIT with these assets, the performance has been in line and consistent to what was has been showcased right from the time the assets were taken over by this InvIT. So
no, sir. I beg a differ, because the unit is moving southwards, because it foresees that distribution will be reduced substantially in the near future. It is as simple as that, sir. And management is not addressing that fundamental issue. That how do you feel that gap?
Vipulji, all the points are very well taken, but kindly appreciate the fact that all these facts were published in our offer document, final offer document, and we can assure that whatever projections we gave in our offer documents filed with SEBI for your consumption and the regulator consumptions are being maintained. It is only, look at from the perspective that we issued the units at 100. We already have paid more than 40.50. So logically, the price should have been 60 or sub 60, but it is still 87 odd. So there is still premium. So debating that whether this product per se is not equity. We have to be very, very fundamentally clear about it. Why the price shot up from 100 to 140 is, it was not something, which was in our hand. And why the price has fallen from 100 to 87, 86, 85, 83 is also not in our hand. What is in our hand is maintaining the assets, maintaining the cash flow, which we are doing. However, the point well taken, for the growth perspective, there has not been any growth since 21 till 24. That's a fact. And rest assured, we are seriously pursuing on the growth part. Hopefully, there will be something good to break to the unit holders in the times to come. That is only I can submit, sir.
In addition to
yes, sir, that is only our expectation, that take care of growth, price will automatically move up. That is our only submission. And regarding your argument that we have received 40, so sir, you have to calculate interest also, annual interest. It is more than 3 years. So you yourself, AAA rated, still you are paying 8.5 to 9 rupees. So that argument is not valid. Anyway, we sincerely, I don't want to be in the argument. Please look after growth. Price will automatically recover. That's my only humble request, sir.
Vipulji, I just want to add into that. Really, yes, we are also concerned, because I just want to add some certain data, which is, you have seen the NEP, National Electricity Plan, October 24. It is telling that 9 lakhs crores are going to be invested in transmission sectors. So this is clear cut, is that these are going to come, and it was also that states are going to monetize their assets. These are also areas that in the transmission sectors also there are areas where we all start, we'll see that, we'll move into that. And of course, we are with you, and we will see that your points are well taken. Thank you.
Thank you very much, sir. Last one small clarification. With the acquisition of 26% of these 4 SPVs, how much our DCF will increase annually?
This reply we have already given last time also. There will be a not major but nominal nominal increase in NDCF. That I can say that way.
Vipulji, in the previous question, I think the chairman had given a very detailed reply to this. If you want, we can repeat that.
Okay, sir. Thank you so much.
Thank you.
Thank you.
Thank you very much. The next question is from the line of Aniruddha Arundekar, who is an individual investor. Please go ahead.
Sir, when I look at your valuation report, the calculation for weighted average cost of capital mentions that one internal rate of for debt or loans to the SPVs, which is around like 14 or 16, and then considers another post-tax debt rate, which is around 6.75. So there is no clear description or rationale given for this jump. So can you throw light on this, or is it I have to put this question to, I think, to the valuer? Another question, small, is that if the approval for unit holders for this 26% fails, what is then happens? In fact, unit holders don't approve this 26% acquisition. Thank you.
We didn't get a second question regarding 26%. What is it, sir?
So if the approval doesn't go through, like your unit holders didn't approve the acquisition, what happens then? Means
Nothing. The deal will not go through. As simple as that.
So in that case, we don't have to. So sorry, sir. In that case, we don't have to acquire this remaining 26%, right?
Yes. We will not be able to acquire.
Okay. And sir, regarding the first question?
Yeah, I mean, in the valuation report, I mean, the actual debt downstream from InvIT to the SPVs is at the rate of 14.5%. This is the part of the structuring exercise that, that has been done. But what valuer has done, that it has, given a notional cost of debt, post-tax 6.75 or something.
After reduction of tax of 25%, we will get the benefit of 6.23.
So the valuer generally calculates WACC in an idealistic manner. So that is why, while calculating the cost of equity also, it takes certain assumptions which are in line with the market practices, but it may differ. Rather, they are subjective. The two persons may have two point of views regarding the same concept. In the same manner, the valuer assumed a post-tax cost of debt of 6.23%. So this is what the valuer felt will be or could be the rate at which the SPVs can borrow.
Okay, but there is no benchmark or reason given why the jump from 14 point something to 7.5, because for other calculations like cost of equity, there are certain assumptions. But for debt, there is no rationale given, because this weighted average cost of capital, at least on paper, affects our value, right? So I expect a little bit more explanation why this jump, because ultimately it affects NAV.
Just give me one minute, Anurag.
Okay.
So in the valuation report, it is written that therefore, in order to arrive at the fair value of the enterprise, we have considered this. That means the cost of debt as 6.23 as post-tax cost of debt for the company as reasonable basis in normal course of business without posing any advantage or disadvantage due to special arrangement. So what the valuer is saying, that 14.5 is something for the structuring part. So in a normal course of business basis, what he has observed in the other kind of companies, the real cost of debt should be around this 6.23 post-tax. So okay. What kind of reasoning other than this do you want? I mean, maybe we can connect offline and maybe we can communicate your thought processes
to the
valuer.
Okay. So thank you. So how this goes through? If I want to connect offline, how should I proceed? I mean, I don't know the procedure.
So there's a mail ID given on a website, investors.
Okay.
Okay. Yeah, you can write over there, and that mail will be landing to our compliance officer, and he can accordingly arrange for a call or something.
Okay. Thank you, sir.
Thank you, Anurag.
Thank you.
Thank you very much. We will take that as the last question. I now hand the conference over to the management for closing comments.
Thank you very much, everybody, especially Mohit Kumar and your team, and also the heartfelt thankful to all the participants for joining us to this call. We generally value your active involvement in PG InvIT's earnings calls, and we eagerly anticipate continued interactions with our investors through these calls. As PG InvIT, we remain committed to provide consistent, stable, and visible returns to our valued unit holders. Once again, I, on behalf of my whole team, express our deep gratitude and anticipate that your ongoing support and confidence in our PG InvIT. Thank you very much.
Thank you very much. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.